Welcome back, guys. My name is Angelo. In case you're invested in the stock market, either via single stocks or via ETFs, which is what I do, you're probably feeling a lot of pain right now. After all, my own ETF portfolio is down 10,000 euros or 6.43% within last week alone. And if we check the start of the year until today, it's not looking pretty. So in today's video, I want to take a closer look at the ETFs my wife and I are invested in. I'll give you my thoughts on the market right now. And I want to look at some historical data for our main ETF just to figure out if what's happening right now is normal, if it has happened in the past, and what we can expect based on long-term historical data for our ETF investments. Before we get started, if you want to see more videos like this, don't forget to smash the like button. And if you'd like to support me, you can find links to all of my favorite low-cost brokers down below in the description. As always, none of this is investment advice, just my personal opinion based on my own experience as an investor. Alright, so let's start by looking at my ETF portfolio, which at least today is up 2,700 euros, and today is June 17th at 11:30 a.m. However, when we look at last week, things are looking a lot worse. Last week we've been down 10,000 euros in value, and that's around 6.48%. If we look at the monthly basis, we're down 8% or 12,800 euros. And if we check the start of the year until today, it's not looking pretty. We're down 29,500 euros. And in percentage terms, that's 16.83%. So if any of you are new to ETF investing and maybe you started recently or you started sometime in 2021, then you're probably not feeling too happy about those investments right now. Then again, it's always useful to put things into perspective. It's much better to make these experiences now and see how it feels when the market is down, since this is a completely normal part of investing. And ETFs should always be treated as a long-term investments. You should have a time horizon of at least 5 years, ideally 10 years or more. Looking back at my ETF portfolio, actually on a 1-year basis now, so since June last year, we're also down 14.53% now. And as you can see, our main ETF, the FTSE World, the accumulating version, which we switched to in the beginning of 2021, just to simplify things like taxes and costs, is now also down 6.11%. But you should know that we started buying this in the beginning of 2021, but we added more and more money towards the end of 2021, which is when the prices were the highest. But those are things you never know ahead of time, and that's fine. That's part of investing, and long term it's not gonna matter that much anyway. Let's switch to a free tool I like to use, Portfolio Performance, which we use to track our ETFs, and peer-to-peer in a separate portfolio. And here you can see our monthly returns since 2017, which is when we started investing in ETFs. And you can see in 2020 we had pretty bad time in February and March, obviously. Then the market recovered very quickly. Everybody thought they were investing genius. And then this year, because of a lot of uncertainties, record high inflation, the market has not been doing as well. We're currently down 15.8% according to Portfolio Performance so far this year. But you can see 2021 was an amazing year with returns of 29%. In 2020, we had returns of 5.3%. In 2019, 31.7%. 2018 was a negative year with minus 5.2%. And then in 2017, at least this little part that we were invested in, we had around 6%. And just to give you a bit more data, our internal rate of return since we started investing in ETFs since 2017 is 5.69% per year at the moment. Between 2017 and 2021, which were good years on average, we had an internal rate of return of 19.29% per year, which was excellent, which, to be honest, is also why it became more and more likely we're going to see a negative year again as well, just to get back to a long-term average of around 7 to 10% per year. Our maximum drawdown was 32.83% in March of 2020. And according to this tool, we're down about 26,400 euros since the start of 2021. Luckily, when we look back at when we started investing in ETFs, September 2017, we're still up 14,468 euros. And you should also keep in mind that we started adding a lot more money last year and this year until the middle of the year. And now suddenly we need to keep a higher cash buffer because we're moving into a larger apartment. Let's have a look at more monthly return data for our main ETF, the Vanguard FTSE World, on just ETF. And here we're looking at the returns for the distributing version of the FTSE World, since we have longer data for this one, since it's older than the accumulating version. However, the returns are exactly the same, as just ETF includes the dividends that were received. And here you can once again see the yearly returns for our ETF. This year we're down 16% and it feels like the world is ending. But last year we were up 28%, the year before 6.17%, the year before 29%, and 2018 we had another negative year with minus 5%. On a 3-year basis, we're still up 28.22%. Obviously, the returns depend a lot on when you started investing, when you added most of your money, which is also why my wife and I are hit more right now, since we added a lot more money over the last year. Also, in case you're interested in how much the dividends contribute to the returns, over the last year, it's about 1.6%, since the dividend yield was a bit lower. However, it still remains to be seen how much is paid out in dividends. In 2021, the dividend yield was about 1.8%. In 2020, the dividend yield was 1.63%. In 2019, it was 2.38%. And in 2018, it was 2.09%. Then we can look at some historical performance on a great free tool called backtest.kuro.eu for our ETF. And this shows us data also before the ETF was live, but for the underlying index. And here we can see, even in the midst of all of this volatility and the financial crisis, if you invested 1,000 euro every month since March of 2005 until April of 2022, sadly we don't have more recent data here yet, then you would be at around 500,000. More realistically, right now, probably like 480, 490 since we went down a little bit here. Or let's look at an investment of 10,000 euros in the beginning. So in 2005, then you would have crashed here in 2008, 2009, and then you would still be sitting on a nice 40,000 euros approximately. So 4x in 17 years is not too bad when you consider how bad the financial crisis was. I'm showing you these things just to put things into perspective. When you invest for the long run, it makes sense to look at historical data, preferably data that looks back as long as possible. And for this, you could look at data for the S&P 500, for example, in the US, which is the most important stock market in the world, making up about 60% of the Vanguard FTSE world as well. Let's have a look at some data for the MSCI All Country World Index, which is the one that's actually the closest to the FTSE world. And here on this sheet, we can see the performance since December 31, 1998. So this also includes the dot-com bubble. And here we've had yearly returns of 6.65% since the end of 1998. And over the last 10 years, we've seen yearly returns of 12.42%, which is definitely above the yearly average, which I personally expect for my ETF investments, around 7% per year. So here's what I'm doing right now. I'm kind of biting myself in the ass that we don't have available cash to invest right now, since the market is down around 17%, which I consider a nice discount for the long run. However, we do need more available cash since we're just moving to a larger apartment and we need to be ready for our upcoming child in October. Look, nobody knows what the market is going to do on a daily, weekly, or monthly basis. And ETFs are long-term investments anyway, so it shouldn't really matter. However, I do understand how much nicer it feels also for our egos to show off amazing returns in our portfolio and to justify our investment decisions to others. Market corrections or crashes are part of the journey. And nobody enjoys going through those, but they're unavoidable. If you want to have good long-term returns in the stock market, you're much more likely to obtain those if you just stay invested. If you're a buy and hold investor, potentially you add money on a regular basis to your portfolio. Looking at statistics, you're much better off than somebody who was always trying to time the market. Market timing is extremely difficult, and very, very few people are able to do it successfully over the long run. All we know right now is the market is down around 17% so far this year, which if you're investing long-term anyway, could be a great discount opportunity. In case you're wondering, my wife and I have not sold any shares. We're not planning to sell any shares since these are our long-term investments anyway. But hopefully when we have some available cash, we'll be able to buy some more shares at a discount and we'll keep buying on a monthly basis, just as we've done before over the last couple of years. And on this channel, I'll keep showing you when things are going extremely well, like last year, where we had returns of 29% in a single year, and when things aren't going as well as we're seeing right now in the current market. This volatility is part of the journey, and that's how good stock market returns are earned over the long run. Still, I would love to know how you guys are feeling right now regarding your investments in ETFs. Honestly, I can't think of a more difficult time for investors than the year we're going through right now. But this too shall pass. Before you take off, if you enjoyed the video, don't forget to smash the like button and to subscribe for more videos like this. Also, if you'd like to support me, you can find all the links to my favorite low-cost brokers in Europe down below in the description. Thank you guys so much for watching, and until next time.